got it. We're recording. All right. Well, we've already been chatting for a little bit, and everyone knows that TSAHC is new to the mortgage broker community. I am personally very excited about this opportunity because I was a mortgage broker myself for nearly 20 years. So when I joined TSAHC 6 years ago, that was one of my personal goals was, being able to offer down payment assistance through TSAHC with our mortgage broker community. And I can't tell you how excited I was when Pat and Vilda from Southwest Funding got us on board to be able to offer that to that community. And I am just so thrilled to be here today. My name is Janielle Levesque. I am the Director of Homeownership Programs at TSAHC. And I have with me today Sarah Eleanor and Frank Duplichan.
Hello.
And then, of course, Velda as well, or Arthur, if anyone was listening earlier. So again, thank you so much for being here with us today. I would like to suggest that, you are welcome to ask questions as I'm going through the presentation. I only ask that you keep those questions to the slide at hand because sometimes a question is asked and the answer is on the very next slide. So if you have any questions in reference to the slide, feel free to ask. Also, you can ask questions in the chat and Frank will be answering those questions as we go along. And then toward the end of the presentation, I'm going to be inviting Velda to also speak about what Southwest Funding is doing and how they're doing that. And hold on, I still have people joining us. It's just amazing. All right. So we're going to be talking a little bit today about TSAHC and who TSAHC is. We're also going to be talking about our down payment assistance programs and our mortgage credit certificate programs. And then I think some of the most exciting parts of our presentation are really going to be talking about how TSAHC can partner with you to help you build your business and what marketing resources are available. And then, of course, what if your home buyers qualify for that assistance? So to tell you a little bit about TSAHC, also called the Texas State Affordable Housing Corporation, which we fondly call TSAHC. We are a 501c3 nonprofit organization, and we were created at the direction of the Texas legislature to serve the housing needs of low to moderate income Texans. We came up with the concept of build, buy, and stay to be able to tell folks what we do at TSAHC. Our build component is all about helping developers build both multifamily and single family developments. And those rental opportunities for folks are great because they get to maybe rent houses in high opportunity areas at lower rent. So we really love the fact that we can help more than just home buyers with our programs. But I know that you guys are all here today to hear about the buy component of our program. And that's where we're going to have, the down payment assistance and our mortgage credit certificates. But we're not only here to help folks get into their home, we want to see them be successful homeowners. So we also have our Stay initiative where we partner with local nonprofits all over the state of Texas, and we provide them trainings to be able to conduct homebuyer education courses for home buyers. I'm still letting people in. Talk about mortgage originators being late. No, I'm just Velda mentioned that earlier. And again, I can say that as well, having been a mortgage broker for 20 something years. All right. So all of our programs, or rather all of our assistance types, come under two different umbrellas. We have our Homes for Texas Heroes home loan program. And I want to tell you that particular program is probably the nearest and dearest to my heart. I mentioned earlier that I was a mortgage broker for 20 years, but when I got an opportunity to start at TSAHC, I really felt like I finally had my dream job. I mean, I got to give away free money, and I got to give away free money to those Texas heroes who included a lot of my family members, actually. I have, firefighters, police officers, and teachers in my family. So it was a great opportunity for me to serve those folks along with those low to moderate income home buyers who I had as a mortgage broker served for many, many years. And so I just was really excited to have this opportunity to work with TSAHC and offer folks down payment assistance. And as I said, I finally have my dream job. But for those folks who don't meet our Texas Heroes profession requirements, we also serve folks through our Home Sweet Texas Home Loan Program. And that program is available to anyone with any profession. Essentially, we help anyone who meets our income limits. And just to kind of give you an overview real quick, this whole presentation is really going to be about the benefits of our programs. And at the end, we'll even talk about where you can go to get additional training so that you can delve a little bit deeper into guidelines and how you might work with a home buyer and qualify home buyers. But mainly, I just wanted to touch base with everyone today and tell you about what TSAHC has to offer you and your home buyers. So with those programs, we offer two types of assistance. We have our loans with down payment assistance, and that is a 30-year fixed rate mortgage loan with the down payment assistance attached to that loan. So it's a little bit easier talking to you guys about this than our normal classes, which we give to realtors, because you have a better understanding of how that works. But essentially, TSAHC is providing the loans, and we dictate the interest rates, and the down payment assistance is attached to those loans. So I tell folks all the time that we're really like a nonprofit mortgage company. All of our profits go into putting out down payment assistance. We act just as a normal mortgage company does by selling mortgage-backed securities, but all of those profits are put back into the DPA. So it's a really wonderful opportunity because government loan types and conventional loan types consider that down payment assistance from governmental sources are acceptable. And you know, this is something that I think in the past, down payment assistance really had a lot of limited sources of funds. So you might run into down payment assistance programs that ran out of money, but because TSAHC works with mortgage-backed securities, we don't run out of money. We have an unlimited source. We also have our mortgage credit certificates program. And I just want to say that that's probably one of my favorite programs because we call that the gift that keeps on giving, and you'll see why in a moment. But as a mortgage broker, I would hear about MCCs from home buyers who would find it on their own. And I was unfortunate that because TSAHC didn't offer mortgage broker opportunities, I wasn't able to help home buyers with MCCs. So I now am excited to make sure that every mortgage broker out there knows about the benefits of an MCC so that every home buyer you're working with has the opportunity to use that product. Okay, now here's where I want to stop and make a note. In general, we have 3, 4, and 5% assistance available. If any of you have been on our website recently or seen our rate sheets, you know, I just mentioned that our down payment assistance is basically premium pricing that we're giving back to the home buyer as down payment assistance. And because of that, with the volatility of the market that we've been seeing recently, unfortunately, when the market moves that quickly, investors kind of lose their appetite for higher rate mortgage loans. So we do currently have a few of our products suspended, but once the market evens out a little bit and investors gain the appetite again, we will be back out with our 4 and 5% DPA options. So normally we offer 3, 4, and 5%. Right now, if you were to look at our rate sheets, we only have 3% available. But any of those assistance amounts would be based on the loan amount. So in an example, if a home buyer was looking to borrow $100,000, in general, they could get up to 5% or $5,000. One of the other things that I think is important to note about our programs is our programs do not require you to be a first-time home buyer. A lot of the old funding sources, like bond programs, do require first-time home buyer products. And this is just moving all on its own. Hold on. All right. And so because we do not have bond program DPA at the moment, you can be a repeat home buyer or even be an existing homeowner. So that's a wonderful opportunity for folks. And then also that down payment assistance can be used to cover down payment and or closing cost. And I mentioned a moment ago that our interest rates are fixed rates, but the interest rate is also driven by the amount of assistance that the borrower chooses. So if the borrower has a 3% down payment assistance option, then the interest rate associated with that first lien mortgage loan is going to be lower than if they chose the 5%. Now I'm going to stop and pause here real quick and just double check to see if anyone has any questions so far.
Jonielle, I thought that they couldn't have owned a home in the past 3 years to qualify. Are we going to get to that?
Very good question. That actually is in reference to our mortgage credit certificates program.
Oh, okay.
Yeah, so the down payment assistance in and of itself is open to, as I said, even an existing homeowner. And they don't even have to sell that house. They could be moving, as long as they're using the DPA for their primary residence, and maybe they're going to be renting out their current house, that's completely acceptable. Now, when you get to a mortgage credit certificate, there is a first-time home buyer requirement on that product.
Okay, all right, thank you.
Yeah, okay. Now, both of our down payment assistance options, or rather all 3 levels of our down payment assistance options, comes with 2 forms of either the grant or our 3-year deferred forgivable second lien option. The grant truly is a gift. There's no second lien involved with that. We do ask that home buyers sign an affidavit that says that, if they were to sell the home or refinance the home within the first 6 months, that they would have to pay back that grant, but otherwise there's no second lien associated with it. So it is truly a gift. Again, that is available at 3, 4, or 5% level options. But the grants are only available on our government loan side. The second option that we have available is our 3-year deferred forgivable second lien. That's a mouthful. And what that means is that there's no payments due, it's 0% interest, and it is totally forgivable on the 3rd year anniversary of the closing date. So, and that's available on all the different loan types. So it's basically a silent soft second lien. And I think probably the benefit of having that second lien option versus the grant option is that the first lien mortgage that is attached to generally has lower interest rates than it would on our grant option. Does anyone have any questions on this slide?
I have a question, Jonielle. So when you're structuring the option 2, do you structure it as a second lien or as a down payment?
So it is a second lien. So when you're saying structuring it in like an automated underwriting or?
Yes.
Okay, so yes, it would definitely be a second lien, but it's going to be a government sourced second lien. So when you would go to, and we actually have some resources on our website that show you how to enter it in automated underwriting for the different various loan types, but it's essentially a community second type of lien. So because it is a community second, it is looked at a little bit differently than a normal second lien, a repayable second lien. Okay, and also I'm really excited to announce our loan comparison calculator, because I've talked about all the various options, whether it be grant or second lien, and the various loan types and the various levels of assistance. And this is really a great tool for home buyers or lenders alike to kind of go in and just play with the various options. So a home buyer can go into our website and say, choose the loan type, choose the assistance level, whether that be 3, 4, or 5%. And then it will give them an idea of how much down is required. And then depending upon the amount of assistance used, how much left of that down payment is required. So obviously, as in the first example, an HFA preferred conventional loan type only requires 3% down payment. So if they were to choose the 3% DPA option, they would only have $153 needed for the remainder of their down payment. Because as I mentioned earlier, that DPA is based on loan amount, not sales price. And it also gives them a various options on, or points out the various mortgage insurance premiums as well. We don't include taxes and insurance, it's just principal and interest in the payments. Okay, on to my favorite subject. Mortgage credit certificate, also known as an MCC. The MCC is an opportunity for home buyers, first-time home buyers, to receive an income tax credit equal to 20% of the mortgage interest that they pay. And they get to do this every year for the life of the loan as long as they're living there. Again, that's an annual tax credit. And they must occupy the home as their primary residence. So if at any point they move out of the home, and maybe they're renting out the home, they would not be able to claim that tax credit. It's only as long as they're living there. But the amazing benefits of this MCC are so powerful. I think the MCC, even more so now with the competitive market that we're in, is so much more powerful because a lot of home buyers are competing on, houses. And then as we know, the prices of houses have been going up. So this really helps them have more buying power because the credit that is allowed on their income taxes can be added to their income to increase their income on the loan application for qualifying purposes, essentially reducing their debt to income ratio. So it's a very powerful tool for you to help get home buyers qualified. And also we give this free to our Texas Heroes, those folks who meet the profession requirements of our Texas Heroes program. As long as they're using our down payment assistance program, they also get to have this for free. Now, Velda mentioned something earlier about the 3-year being a first-time home buyer, not having owned a home in 3 years. I want to point out that first-time home buyer definition because it's really important. A first-time home buyer definition for the MCC credit means that a home buyer cannot have owned their primary residence or, had any ownership interest rather in their primary residence in the last 3 years. So they can own investment property and still qualify if they've been renting their primary residence for the last 3 years. So that's pretty helpful for a lot of folks who might automatically disqualify themselves thinking they're not a first-time home buyer. They might have interest in a home that they inherited, or maybe they have a vacation home or second home. As long as they're currently and have been renting their current residence for the last 3 years, they are considered a first-time home buyer. Do I have any questions so far on the MCC? All right. So I mentioned a moment ago that the MCC is equal to 20% of the mortgage interest paid each year, and that's every year for the life of the loan. But I want to give you an example of how powerful that is for a home buyer. So let's say that a home buyer has a loan amount of $200,000 and their interest rate is 5 3/4%. In that first year, they're going to be paying $11,500 in interest. So what this means for the home buyer is that they are going to have an income tax credit of $2,300. That's huge. That is significant for folks. That can maybe mean the difference between them being able to buy a car, or maybe even use that to pay one of those house payments that year. So this is very significant for folks. But one of the things I also want to point out is that this is only a benefit to those folks who have an income tax liability. If you have a home buyer who has paid Social Security or something like that, this is not a product for them. But anyone else who has an income tax liability should benefit from this product, okay? And one of the things I hear all the time from folks, and Sarah and Frank could agree with me. We get folks all the time who say, I don't pay income taxes. I get a refund every year. And my first thought is, well, what are you getting a refund of? You usually get a refund of your own money. So we wanted to point out to folks, we came out with a cute little way to show how people can benefit whether you get a refund or not. In this example, and I like using Janie because that's my boss's name, so I like giving her a hard time. But in this example, let's say that Janie has an annual income tax liability of $10,000 a year. She has, when she started with her employer, she filled out her W-4 form and told her employer how much deductions that she should have, and so that the employer is taking that money out and hopefully will take enough out throughout that year to cover that debt. So let's assume that this annual tax liability needs to have that bucket full by the end of the year for her to have paid that debt. So each week or each month or every 2 weeks, however frequently she gets paid, a little bit of that money is coming out of her payroll, right? Through her payroll deductions. And hopefully by the end of the year, she's had enough taken out to cover that debt. In this case, she had enough and it resulted in a refund, right? So this is where folks say, I don't owe income taxes. I get a refund every year. Well, yes, but you owed $10,000. Your employer was saving that for you throughout the year. So let's say that the next year you have told Janie about that MCC tax credit. She is a first-time home buyer. She now knows the powerful effect of an MCC, but her tax liability is still the same. It's still $10,000, but with that MCC, the little MCC man fills the bucket first with the $2,300, and she now only owes $7,700 at the end of the year. But her employer is still taking that money out with every pay period and is filling up that bucket for her, right? So at the end of the year, again, hopefully she has enough to cover that $7,700. But in this case, because the employer is still taking out the same amount, that will increase her tax refund by, can anyone guess? $2,300. So that's pretty powerful, right? I mean, that, as I said, for our low to moderate income home buyers, that can mean the difference between them buying a new car or maybe making another house payment or, taking the family on a summer vacation. So pretty significant, powerful tool for the home buyer, but also significant and powerful in that it can help them qualify for more. Because as I mentioned a moment ago, that $2,300 can be added to the income for the home buyer to maybe help wash out some of their debt and help lower their debt to income ratios, making it a little bit easier to get that automated underwriting approval. So do I have any questions on the MCC?
I want to just comment on that we see it all the time, that just having that extra, whatever the $2,300 is, divided by 12, 160 something a month, added that to their income every month, it literally can make a difference in approving that loan or not approving it for their DTI.
Absolutely.
So that is really important.
Yes, and I'm glad that you guys are seeing that over there as well, Velda. As I said, when I was a mortgage broker, I heard about this opportunity and I was really disappointed that I didn't have access to it. So I'm even more excited to be able to share this with you, because when I think back of 20 years as a mortgage broker, how many home buyers I could have benefited from this product, but because I didn't have it available to me. So now through the help of Southwest Funding, we do. So thank you guys. Okay. So we've talked about some of the benefits of the programs, but we also have some other things that we've talked about amongst us, Sarah and Frank and I, and all the various ways that this has helped folks, and even some phone calls that we get from home buyers and lenders alike who talk about the ways that our down payment assistance has helped folks. So I just like pointing those out because, you might not think of it right now, and you might be running into some of these issues, not realizing that DPA can help you. And you guys, I am still letting people into the room. So they're going to have to come back and watch the recording. Yeah, I've been letting people into the room the entire time, which is great news. But, one of the things that we recently did, we actually have a podcast, by the way. We have a podcast on our website. You're welcome to start listening. We're sending your home buyers to listen. But we recently did a podcast episode called Tips for Winning the Bid in a Competitive Market. And so some of the things that we came up with for using down payment assistance or mortgage credit certificates are, as an example, down payment assistance can help your home buyer contribute more to their down payment. Imagine having a seller getting two comparable offers as far as sales price goes, but one has a slightly larger down payment. So that can make a home buyer's offer on a house look a little bit more appealing to that seller. And all they did was use down payment assistance to help beef up their down payment. So that's one way to help a home buyer. And then also down payment assistance can free up the home buyer's savings. We don't know And people don't recognize the expense of going into home ownership. And so we don't want to make them cash poor the second they move in. I mean, Frank experienced that last year. I think he moved in and his, water heater or something gave out right away. So it was nice that he had used our down payment assistance because he still had a little money in the bank to kind of help him with those unforeseen expenses. And then of course, home buyers don't have to disclose that they are using down payment assistance. And that's something important to note. I mean, all of you out there as brokers know how realtors can tend to be a little apprehensive about either using government loan types or USDA loans or down payment assistance loans because they're worried that the sellers aren't going to look at that as a competitive offer, and that there's always difficulty in getting to closing. But if you look at a purchase contract, nowhere does it say what down payment assistance program are you using, right? So this is not something that has to be disclosed to sellers. A seller does not need to know. And it's important to note, and as you guys get going through the process, you'll see that really our process is no longer than a normal traditional loan closing. We actually take about 24 to 48 hours to review files. And of course, that can be done simultaneously as, underwriting or other things on your side is happening. Something else I want to point out, I mentioned earlier that our down payment assistance programs are available to repeat buyers. So a lot of the old down payment assistance programs were the funding source was bond programs or bond funds. And our down payment assistance is non-bond. So again, that is available for repeat home buyers. Also, I mentioned earlier about the MCC and the powerful tools that it can help in increasing your home buyers' buying power. Also, down payment assistance allows for buyers to use their own funds to pay down debt. Maybe you have a home buyer that needs to pay off some credit cards. Maybe they've saved enough money for their down payment, but their debt to income is just a little too high. Our down payment assistance cannot be used to cover anything but down payment and closing costs. But that would free up your own or your home buyer's money to pay off debt. Or maybe you have a home buyer who is in an appraised, the appraised value is a little low in this competitive market. Folks are paying over appraised value every day. So we cannot cover that gap with our down payment assistance, but your home buyer's funds can. And then our down payment assistance can help them cover the down payment, right? So, I mean, there's just so many different little ways to use this. I actually have several lenders who tell me all the time that, and actually a couple of our top lenders who will present down payment assistance as an option to their home buyers, whether their home buyer has their own funds or not. And he will do the numbers and do the math for them and show them, yes, you're paying a higher interest rate, but look at how much it's costing you or very little costing you over the life of that loan. As an example, let's say you have $10,000 in down payment assistance. If your monthly payment is only $100 a month to get that down payment assistance, then it's worth it in the long run, depending on how long that person's going to live there, right? So, I mean, there's just so many options on how to use this. Felda, did you have a question?
Well, I just wanted to comment that one important thing to remember here is that, the interest rate for a loan on a mortgage is tax deductible.
Yes.
Now, a lot of times their tax deduction won't exceed what they would have. That's the normal tax deduction that the IRS gives you. However, if it's a borrower that has other things, they tithe 10% or, different things like that they do where it would, with their interest, it would accumulate to be more than the $14,500 or whatever from the IRS. They get to use that as a deduction. But in addition, if they have the MCC, that's not a deduction, that's an actual credit.
Yes, dollar for dollar.
Yeah, so they can really benefit, and that's a sales point, actually, when you're structuring this for your borrower.
Yes. So I think what I hear you saying is, like, as an example, if a person was using the down payment assistance and mortgage credit certificate combined, which they can do,
Yes.
I hear from lenders all the time that, yes, the down payment assistance mortgage loan is a slightly higher interest rate, but when you take into consideration of adding that MCC, and the 20% credit that they're going to get for that mortgage interest effectively reduces the interest that they're paying on that loan, right?
Right.
So it's a great tool. All right, so at this point in the presentation, I always say that, you know, you hear about all the wonderful benefits of the MCC and the down payment assistance, and obviously your first question is what of my home buyers qualify for this assistance? Who can I help with this product? We have a great quiz on our website, and I know Frank jokes around about it, and I do too. A lot of times folks hear quiz and they immediately start running or have, you know, remember those nightmares that they had of taking pop quizzes in school, but it's nothing like that. It's 4 simple questions. It asks you what your profession is so that it can determine if you fall into our Texas Heroes profession program or into our Home Sweet Texas. And remember, we can serve anyone regardless of profession. And then one of the other questions is what county are you purchasing the home in? Because what it's going to do is look at the individual income limits for each county. Each county has a different income limit. And then it's going to ask you if you're a first-time home buyer, because then it's going to determine whether or not you qualify for our down payment assistance alone or the down payment assistance and MCC. As I mentioned, MCC is only available to first-time home buyers. And then it's going to ask you what your income is. So 4 simple questions that'll help determine whether or not a home buyer qualifies. Something I want to point out, Sarah does our module 1 training, which is what all of you are going to have to take to actually participate. What you're doing today is you're hearing an overview of all of the benefits of our program. But we do require that all loan officers who are participating in our programs take our module 1 training, which can be found on our website. And Sarah actually conducts that training, and she's going to go into all the details of how you qualify someone using our programs. The quiz, I think, is a great tool for a home buyer to look at and determine if they qualify, but ultimately, we encourage home buyers and realtors alike to send their home buyer to a qualified participating lender, because you guys know how to calculate income better than home buyers do. And also, you know what income can or shouldn't be counted, right? So there's various types of ways to qualify the home buyer. So I encourage all of you to take the module 1 training where Sarah talks about the various types of income to use for qualifying. But ultimately, they can go to our website, you could go to our website, and they can take this quiz just to get an idea. We also have this great couple of minute video that kind of walks the home buyer through the process. I mean, you know, I mentioned earlier that we are a statewide nonprofit. We do not take applications directly here. We do not work directly with home buyers. We truly depend on our partnership with our lenders and our realtors and now our mortgage brokers on helping us qualify those home buyers. I honestly don't want to have to ever answer another home buyer call again. So the better you guys do at that, that's great for me. But when I do talk to home buyers, the thing I stress to them over and over again is that they really need to talk with the lender. And we have great resources on our website for home buyers to find those lenders. And that's actually a great point for you guys as well. You can be listed on our website once you have done 4 transactions in a 12-month period. You could be listed on our website to get those free referrals as well. And believe me, our lenders on our website get a ton of referrals. Okay, this slide's a little off. There we go. So resources for you as lenders, you can click on the lenders tab. You can from there see in today's interest rates, and also brochures, which I'm going to go over in the next slides with you and show you the brochures. But you can order brochures directly from our website. Marketing resources. I mentioned earlier about how we really depend on our relationships with our lender partners. And it truly is a partnership. One of the things that, you know, when I very first started TSAHC 6 years ago, I had to talk with Sarah, and I'm like, okay, Sarah, you know, there's just 2 of us. At the time, there was just 2 of us promoting these programs all over the state of Texas. Now we have Frank, who does most of our trainings. But still, there's just 3 of us telling home buyers all over the state of Texas about our programs. And so we talked about, what ways could we partner with lenders, encouraging and helping lenders build businesses for themselves while also helping home buyers, while also helping TSAHC. And ultimately, it's a win-win for all of us. So we have come up with so many tools for you as a lender to market yourself as a TSAHC participating lender. We provide free brochures. Here's several samples of the brochures that we have available on our website. And on the back of those brochures, we have a blank space where you can either staple a card or even get a sticker card on the back, because we truly want those home buyers contacting you. We want that relationship between the home buyer and us to be through you. So we provide all kinds of tools because you're helping us. Again, that's a win-win. You're helping share the word of TSAHC. But ultimately, I want to point out something. Having been a mortgage broker myself, and recognizing the competitiveness of being in that business, something I tell lenders all the time, when you think about it, the pool of qualified home buyers with a lot of money in their pocket is a much smaller pool, and every lender out there is vying for that business, right? They're all vying for the same small pool of well-qualified people with a lot of money. But there are a lot more folks out there who are renters right now today who qualify for a mortgage loan, but they just don't know it. They don't know that they could be a homeowner because they're imagining this large down payment that they have to save a lifetime for. But they qualify in every other way. So that's a much bigger pool of folks with a lot less competition. So in the 6 years I've been at TSAHC, when I first started at TSAHC, I had some new loan officers who were completely new to the business and who now are closing upwards of 150 TSAHC loans a year, because I helped them create a business in this market, in a market that has less competition and is home buyers who are more appreciative. I mean, as a mortgage broker, I remember home buyers, how ecstatic they were to work with me because I was patient enough to help them get through this process. And I have the same cell phone number I did when I was a mortgage broker. And after 10 years, I still get calls from home buyers I helped way back then who are ready now selling their home and moving on and want to work with me again. So what a great opportunity for you to build a career and a ongoing referral source. So that's just my sales pitch because I really like our products. And as you can tell, I get excited about it. But again, we have so many wonderful tools for you. We also have some flyers that you can print off right now today. I want to back up real quick. On those brochures, please allow 2 weeks for delivery. They are professionally printed brochures. You can order them from our website. We will mail them to you for free, but allow 2 weeks for delivery just in case you have some big event that you want to share them at. But if after leaving today, you're really excited and you want to get started right away and you don't want to wait for delivery of those, we do have flyers that are color flyers that you can print right now today, and at the bottom can put your contact information. But there's great options available there. We also have the 10 steps to buying a home. This is a great tool to sit down with a new home buyer and kind of go through the whole process with them and show them the 10 steps to buying a home. And also is available in Spanish. All of our brochures are actually, so we have Spanish and English brochures. But the next thing I want to talk about, I mentioned a moment ago about all the marketing resources available to you and that how we depend on you as partners to help get the word out. We came up with our Train the Trainer program, and I'll give Sarah credit for that one. When I sat down with her and I first started, I said, okay, how can we get help to market these programs? How can we partner with lenders and help them in their business as well as helping get the word out? And she came up with the Train the Trainer program, and we started that. And what that is it's me talking, and I always say it should be an hour, but I talk a lot, so it's probably closer to an hour and a half. But it's me talking about all of the marketing resources available. Also, it's about training you as lenders on how to present our programs. We have on that presentation, once you take that presentation, you will have access to slide decks, you will have access to scripts, and we will also give you all of our tips on how and where you might market these programs. So it's a great opportunity for you to learn more about TSAHC and how to partner with TSAHC and market TSAHC. We have scripts and presentations that are specific for like home buyer seminars, or maybe you want to do at a networking event with other professionals and you want to present to realtors or a group of realtors. So there's scripts depending on your audience. So more tips on how to promote TSAHC. And we are done. Velda, it's your turn. You're on. But I guess we can stop there and ask questions first if we want.
Yes, does anybody have questions about any of that? So I have a question that this just came up yesterday, and I was emailing with Frank about this. We have been asking on the MCC, y'all require 3 years of tax returns.
Yes, ma'am.
We have been requiring 3 years of tax transcripts that, we have to pull from the IRS, or we will accept them to come from the borrower to provide the transcripts for us. And the way Frank answered the question yesterday, that it can be either 3 years of tax returns that the borrower provides, or it can be 3 years of transcripts, one or the other. It does not have to be both.
Correct.
Is that correct?
Correct.
So if the borrower provides us copies of what they have filed with the IRS, unless there's something weird about it that we feel like we have to get a transcript, then we should be fine with just what they provide us as tax returns, correct?
Correct. And just to note, the tax returns we are not looking at income. I mean, obviously, if we see that the income greatly differs than what was submitted to us to meet our income limits, obviously we would question that, but we are not underwriting that income. What we are looking at these tax returns for is to determine if they are a first-time home buyer. So if they are, if they are claiming mortgage interest, then we're going to question that. And it, maybe it is that they have rental properties or investment properties or something like that, and then we would have to have proof that they're renting their current residence. But that's ultimately what the tax returns are for, is so that we can see whether or not they're claiming mortgage interest for the first-time homebuyer requirement.
Okay, that makes sense. Okay, so also I want to talk about the reservation process and how we will be handling that. As originators, when you take that Module 1 training, please forward me your certificate so that I can go into the website and add you into the drop-down, and that will give you access to get in and view your loan. Now, when we reserve the funds, typically we do not want to reserve them until we know that the file is on its way, and we're going to be coming up with, we really don't want to reserve funds on like a suspended file necessarily, because from the time we reserve the funds, we have 60 days, not just to get the loan closed. We have 60 days to close the loan, fund it, ship it to the investor, and for the investor to purchase it. So actually, the way we're going to do it is from the time the originator tells me or tells Ben or whoever of us is working with the file that they want to reserve funds with TSAHC, we reserve those funds. We have a total of 60 days. We turn it into our secondary department. They actually send you a lock with a 25-day expiration. We want to make sure that when we do that, your loan is within 25 days of being able to close. So if you haven't even really taken an application, 25 days is not realistic. if you don't have it anywhere near ready to turn in for underwriting, 25 days is probably not realistic. So, because we need that extra time to get that loan packaged and shipped to the investor, work out any post-closing issues that the investor might have, and get that loan purchased by the time that 60 days is up. Does anyone have questions about that?
There were some questions in the chat, Velda, about who will process the file and what that will look like. So maybe you go in a little bit deeper on that.
Sure. So you or whoever you choose processes the file, and you turn in to us a processed file. We do not have processors for that. So it will be up to you to structure your loan. It will be up to you to decide. Right now it's 3% is your option, but when the 4 and 5% comes back as an option, it's up to you to decide which option you want. It's up to you to decide if you want an MCC, if the borrower qualifies for one. We didn't talk about, I believe for HEROES, the fee is waived, the $500 fee is waived, correct?
Correct. Correct.
So it's up to you to structure that and to calculate what that MCC will be if you're going to do an MCC. It's not up to us to structure your loan for you. Now, if it comes in and it's not structured right, or say you calculated the MCC incorrectly or something like that, the underwriter is going to adjust, just like they do with your income if that wasn't calculated correctly. But you will need to turn in a processed loan to us that is structured the way you want us to underwrite it.
Velda, will they be pulling TSAHC docs?
No, we will be doing it.
Okay, so on that side of things, TSAHC documentation that's required for our pre-closing package and post-closing package will be pulled by Southwest Funding. And you will contact the borrower to have them sign or will you be sending that back to the broker to have the borrower sign?
We send it to the broker to have the borrower sign it.
Okay.
Okay. So, yeah, I mean, we never contact a borrower directly. And so, and then I did have a question for you all. This came up yesterday. Typically, the way our retail side does TSAHC is they don't turn the loan in to TSAHC for review until it's clear to close. Is that a TSAHC way, or can we turn the loan in prior to that?
Yes.
I mean, yeah. We can.
And actually, I would suggest that you do that, and that's a pretty standard thing that a lot of lenders do. They are waiting for clear to close before they turn in the file, so that's not just Southwest Funding. That's a lot of our lenders do that. But honestly, there's no reason to wait until then, because what happens is you guys are on a crunch to get to closing, and there's a possibility if there's one condition needed that we're delaying closing by waiting so long. So the only thing that is needed in that pre-closing package is that sometimes is waiting for underwriting, is that underwriter certification. But that underwriter can certify and submit it, and then go ahead and get it submitted to us while other conditions are being cleared. Now,
okay. So then after it's clear to close, do we submit that final clear to close to you, or you've already done your piece?
We don't need that. Once we have approved the 4 documents on our pre-closing checklist, and that's how simple the pre-closing checklist is. It's about 4 documents. Once we have cleared those, which includes that underwriter's income certification, we will issue a commitment letter. Once we've issued a commitment letter, then you guys are free to close. Nothing else needs to be submitted to us. The only thing that we suggest is if you are submitting prior to clear to close and income were to change, maybe there's conditions, income conditions. If income were to change, then you would need to resubmit an updated income certification to us.
Okay.
But otherwise, I think best practices are to go ahead and get that all done ahead of time prior to clear to close.
Okay. Yeah, we're going to have to revamp our process on that a little bit, but yes, we will do that. One thing I do want to mention to all of you is just a reminder that as a broker, a loan officer, you are limited to 1.5% lender paid comp. And that is priced into TSAHC already when we reserve those funds.
Yes.
So, so that is the amount you can make. So I know we're all used to making more money than that. And as a lender, we are too. But this is a service that we're providing. And so we're excited about everyone participating in this.
Half of something is better than all of nothing. That's what Danielle always says.
Yes.
That's what I used to tell all the loan officers when I was training loan officers, and they were always trying to make a killing on every deal. I'm like, half of something is better than all of nothing. And the way I look at this is not only is it, half of something is better than all of nothing, but you're helping someone. So it's a feel good moment as well. I mean, you're helping people who didn't have the opportunity for home ownership any other way. And it wasn't going to be a deal if you didn't use TSAHC, right? So it's a win-win for everyone, including the home buyer.
Yeah. Yes, absolutely. Okay. So when all of you are ready to submit your loan, you're going to submit it through our LOS system, which is Lotusoft. Everyone should have received credentials for that. If you have not received credentials, please reach out to me and let me resend those to you or whatever. Your invite actually comes from Lotusoft, and it will allow you to set up your own credentials. You're going to upload your loans right into our system. In that system, you can run AUS, you can run, well, with TSAHC, you're going to be running DU. But if you're doing another loan and want to run DU and LPA, you can run them simultaneously and compare them. But with TSAHC, you'll be running DU. So you upload everything right there. As soon as we jump off of this call, we have a call with our developers. We're having some glitches in our system today, and our pricing engine is having some issues today. So we've got to get that figured out. But we're always here to help you with getting those kinks worked out. And I think all of you know too, our LOS system is new. Our wholesale division with Southwest Funding is new. And so we're developing, while Southwest Funding has always done TSAHC loans, it is new for wholesale. And so while we're developing our systems and getting all of that done, we appreciate all of your patience with us while we make that happen. And we're here to help you with whatever we can help you with.
Great.
So just to jump in there real quick, I might say, Danielle mentioned module 1 as the good training to take and required training to take for Velda to give you your login credentials or, access to view your files in the pipeline in the lender portal. Module 2 might be beneficial to you to take as well, just so you can kind of see what the entire process looks like on Southwest Funding's end. And what they'll be doing to process your file with TSAHC. And Frank did share the step-by-step procedures in the chat feature, which I think is helpful, so you can kind of see how the loan will move through the pipeline.
Yes, and especially as brokers, if you have in-house processing, you're going to want to take module 1 and 2. Module 1 is generally for the origination side, and module 2 is for processing and closing side. But just as Sarah said, I was going to end on that, your next step in using TSAHC is going to our website, clicking on the lenders tab at the top, And in that drop down box, you're going to find lender training, and that's where you're going to find module 1. And that should be your next step in starting to use TSAHC.
And I would encourage all of you to have your processors take that module 2. Just, maybe buy them lunch and let them sit and watch the module through their lunch hour or something. But it's important that a processor knows how to do this, because as much as we want to, we cannot structure your loan. I mean, we don't know exactly what you want. So we'll help you any way we can, however. Do we have any questions on the chat that we have not addressed?
I think Frank's been keeping up with it, right, Frank?
So here we go. Now you can hear me. I've been keeping up with it for the most part. I just have 2 things that I've written down to kind of follow up with you on. The first thing is, I know you said something about running TSAHC and DU. Is there a reason why you guys only do DU and not both DU and LP for TSAHC files?
Well, that's a good question, because I thought that was a TSAHC requirement.
No, we have LP and DU available.
Well, there you go, everybody. You can do either one.
Hey, okay. Just wanted to make sure. And then my second question was, you said that there's going to be a person on your end that's going to go on the TSAHC website, get our documents, and then send it to the broker's team to get them signed. And then I'm assuming collect those documents from the broker to upload them. Who is this person, and what is their name? Because they sound like they're going to be busy.
Well, right now, our assistant underwriters are the ones who do that. So we will continue with that.
Okay. So it's it's the assistant of the underwriter who's probably already working that file anyway. That's going to be sending that.
Correct.
Awesome. Okay.
Yeah, our underwriters and assistants are in teams.
So I would like to add one thing. We've been talking about login credentials and how all of that works. TSAHC does have its own reservation system where our process is happening. And so when you take that module 1 training, you will be, Velda mentioned earlier, but I want to go through it again. You will be sending a completion certificate that says, I've taken module 1 training. You'll send that to Velda. Velda will assign you login credentials to our lender portal, where you will have only view access. You will not be able to submit documents. You will not be able to download all the documents, but you will be able to see the status of the file. So that way you can watch as Southwest Funding does their end. You can make sure and know what's going on. Is that correct, Velda?
That is correct. And one reason for that, here's just an example. I know in a lot of retail areas, the loan officers or processors are responsible for doing that themselves. We had a loan in our retail side that they decided to allow to transfer over into our wholesale side. Somehow a processor had registered that loan on February 19th. It's a build job. It's not even going to be, the house isn't even going to be done until the end of May. So I had to call Frank and say, what do we do about, well, y'all, it's extension fees. And it's 1/4 point for 10 days. And that's a lot of extension fees. And so with us doing it this way, with us being the ones to register, then we're going to have to manage that, to make sure that we don't have reservations hanging out there that aren't going to be fulfilled.
Right.
Or that we're going to have huge fees for.
But also by giving them view access, brokers can see what's going on with the file, what the status is, and they don't have to keep calling you to figure out what the status is on our end. They can
Well, and
that.
the only status I would think they're going to be able to see is when you all have reviewed it.
Right. But
Right.
when we review it, we will give conditions if there are any. So that broker, as a broker, you can go in and see that it was reserved. You can see that we've reviewed it. You can see what the conditions are, and you can see when we've issued our commitment letter and approved our end.
Okay. So one thing everybody should note, please, is that when you see their conditions, that does not necessarily mean it's the only conditions required. Right?
Right.
Because the underwriter could have different conditions because we underwrite to the investor guidelines.
Right.
And they're just conditioning for what TSAHC needs. So that will be mirrored too on our Southwest funding condition. You know, we will, that will match up. But please don't think because you see it in TSAHC that that's all that's needed.
That's a good point. Very good point. Well, I think we're out of time today. We got started a little late and we're now 10 past 11.
I'm sorry, just one more thing.
Go ahead, Frank.
I felt like everyone danced around it, but it needs to be said. The reason why you guys are giving user credentials and the reason why you want to be able to view your files is after you close 4 TSAHC loans, we then list you on our website for free referrals.
Yep.
So we can keep that business going. Okay.
Yes, that's
the whole point of all this is so that you guys can get your credit. So please make sure you're getting your usernames and closing those loans so we can make sure you get those free referrals.
Yeah, I pull
Frank,
report.
I have a question.
Oh, go ahead.
Go ahead. I have a question about that. So say somebody was with another company on a retail side, they did loans, and now they've gone to a broker shop. When they go over and now they're going to be listed in the wholesale side, does that come with them or they start over?
So I'm the one that pulls the production reports every quarter. And we pull reports based on the loan officer's name.
Okay.
So if they're at multiple companies, I will be able to see their production. Now, I would like to point out that as TSAHC has grown, I am starting to run into issues where people who have common names, because let's say Jane Smith or whatever, a common name, if I'm pulling production for that person, it could be multiple people. So if you have a common name, and this would be helpful for you, Velda, maybe use their middle initial or something to differentiate them a little bit so that I'm not combining production for multiple loan officers or giving credit to the wrong loan officer.
Do you have a field in where that is registered? I don't recall this, but to have their NMLS number in there?
Yes, there is.
Okay, so that would be one way to identify them as well, is their NMLS.
Yes. But adding a middle initial or something like that would help as well.
Okay, very good.
Yeah.
Anyone else have questions? Everyone say hi to Ben. He is an account manager, and a lot of you will be talking to him. You've already talked to him a lot. Hi, Ben.
Hey, Ben.
Hi, Ben. That'll be easy for me to remember. That's my husband's name
Yeah.
too.
All right. Well, everyone, thank you for your time today, to all of you.
Do we have any
thank you.
closing comments from everyone? I mean, everyone's muted. You can unmute and start, talking, saying thank you now if you want.
Or list off the 10 people you have in mind to go help today.
Yeah.
Yes.
All right. Well, thank you, everybody. We appreciate your time and we hope that you're excited about it. We sure are.
Thank you.
Thanks, Bill.
Bye, everyone.
Bye.
Bye.